How many you got over 20 now? Yeah, we have 3 5 to get in.
All right. And are you seeing the note slide or the PowerPoint slide?
I'm seeing the note slide.
The note slide, okay.
PowerPoint slides now.
Yep. Perfect. So we got a few people on. Thanks, everybody. We'll get started in a couple minutes.
We should have some music in the background. You notice how some of these talk shows have music.
I'll definitely keep that in mind for
Michael
next
would
time.
know what show that was. I don't think you would know either.
The Price is Right.
No,
Jeopardy.
that might be Jeopardy.
That's Jeopardy.
You could put that. You could put music from my favorite video, the Usher video.
And although we're starting at 10, I'll just give people a couple minutes to log in. So let's get started around 10:02, 10:03.
Hua Diale. Is that it?
That's correct. You got it.
Thanks for those who just dropped in. We'll get started in just a moment. Thank you for your patience. I think we got a few folks here, enough folks here, Ricardo. I think
Are we
feel
ready?
free to kick it off. Yeah.
Well, good morning, everyone. This is Ricardo Noguera, Economic Development Manager with the City of Brentwood. Today, you will receive a very worthwhile presentation on tax planning for business growth. In terms of background, the City of Brentwood's Economic Development Office holds these monthly workshops, typically the third Thursday of each month from 10 to 11 a.m. And this is all focused on business retention and expansion and growth of new companies here in Brentwood. Over the next couple of months, the tentative schedule is July 17th would be our next presentation. Do you know your numbers? That'll be on bookkeeping. Audrey Johnson, a local accountant, will be giving that presentation. On August 21st, we will have a focus on nonprofits, which is actually pretty new, strengthening your mission, resources, and so forth. And we will have an expert nonprofit representative to share the ABCs of running a nonprofit. And then in September, we will be joined by someone from the state who will discuss doing business with the state, pursuing grants, loans, and so forth. And you can go to our website here to learn more about future workshops. Next. We have a very small but effective team here in Brentwood, led by Darren Gale, the interim city manager, and now we have Sakari Bashirs, the interim assistant city manager, myself, and Abraham. Next. Today's speaker, and I had the opportunity to meet with him a few days ago, and was very impressed that we had such a talent here in Brentwood. Michael Uadiale, who is a local CPA. He owns Smead Inc. And let me give you a little background on Michael. He's got more than 25 years of experience in the field. He's owned and operated Smead's for over 18 years. He's the founder of a 7-figure revenue firm with 15 employees. He's developed a proven system that helps entrepreneurs achieve financial freedom within 5 to 7 years through strategic tax planning and wealth building. His expertise has helped clients save over $15 million in taxes over the past 7 years, with an average tax savings of $31,000 per client annually. He's also a successful entrepreneur who has founded 6 other businesses, including investments in innovative telehealth software. Without further ado, I will pass the microphone to Michael.
Thank you, Ricardo. I hope everybody can hear me. Good morning. I'm out here in Napa this morning, and I'm going to share my slides so that we could get started right away. When I get invited to speak, I like to keep to the rules. So I got 30 minutes max to present, and I will open it up for questions. Abraham, I appreciate if you can confirm you see my slide.
I can confirm.
All right, good. So today I want to talk really about my most favorite subject, which is tax planning, because for any business owner, it's so important to really focus on tax planning, okay? Again, this presentation is purely educational. I typically will say that it does not create a client relationship between any listener or our firm. What I will be presenting are purely conceptual because everybody's case is very different. I like to give a short introduction about who I am in the area of taxation. First and foremost, for me, I am a business owner. I am an entrepreneur. I really am very passionate about business owners. They keep the economy running. So it's always very important to me that people understand that I'm first of all a business owner before being a CPA. I am truly, truly a master tax strategist. It's not about the number of years I've been in the field. I genuinely dive into all what it takes to be successful in that field and to be able to bring value to clients. I'm a financial coach to many very successful entrepreneurs in the 7-digit figures of revenue. Like Ricardo already said, I've been the managing partner and the founder of Smith CPA since 2007, and I'm the co-founder of the Financial Freedom Academy. I'm licensed in the states of California and Texas. So that's just my credentials for whatever it's worth, and I will move on to the presentation. Now, I'm going to stop and let Abraham ask some questions so that we can get going. Now, I don't know if the attendees are able to type in their answers into your chat box, but I'll let you take it from here for now.
Yeah, please feel free to answer 1, 2, 3, 4, or 5. Our first poll question is your business stage. Where's your business currently at? Right. We got a business growing. And then we got some few folks here, so feel free to, don't be shy. This will really help us. And Michael cater the presentation. Got some established businesses, some people just getting started. Already got a good question here. Got some,
Is
got
that
some,
question for me?
I think Ricardo's just dropping it in there. But you feel free to add whenever. I know your presentation will cover some of this material, but if no one else wants to drop in their answer there, I think we can keep going, Michael.
All right, good. So now let's get started. Now, I won't bother ask what I have on the screen because I know the answer to that. I haven't done this now for over 18 years. Nobody really wants to pay taxes. I typically ask this question when I do live presentation. How many of us will like to legally, ethically, and morally get to as close to zero taxes as possible? When I do it on a live presentation, everybody's hands goes up. And that's what I want to talk about today. My goal today is hopefully to expand every one of you's mindset as to how you see taxes and where taxes play into in your business and helping you get to financial freedom, okay? So to get started, I like to kind of put out there some very interesting facts about taxes. For most business owners, of up to 80 or 85% of business owners, they do not do any kind of tax planning. And what that means is for an 8-hour day, you are really giving 2 hours and 40 minutes of your work life to the tax agencies. In 1 year, that means all of your work in 1 year, 4 months of it is given to the tax guy. In a lifetime, that translates up to what I call 13 years and 4 months of financial prison because you are not doing any kind of tax planning. This exactly is the situation for most business owners because they think they don't have options as to how much the government can take out of their finances. And that's really not a great picture. And if you really care to know further, our original tax code has over 6,871 pages of tax law. Only about 30 pages of all of those codes are devoted to raising taxes. Whether you like it or not, the remaining 6,841 pages are devoted to how you can legally, ethically, and morally reduce your taxes. What I'm going to be sharing today, there is no gambling in it. There's nothing illegal. There's nothing unethical. There's nothing immoral. Because sometimes when you begin to talk about tax planning, people are thinking that you are talking about evading taxes. Nobody wants to go to jail. And so I've not been a CPA for close to 21 years, if any of what we're doing was illegal. Here's my favorite quotes. It says, anyone may so arrange his affairs so that his taxes shall be as low as possible. He is not bound to choose that pattern which will pay the treasury. There's not even a patriotic duty to increase your taxes. And that, ladies and gentlemen, is the reality of what tax planning is all about, okay? Now, the real reason most people overpay on their taxes is not because taxation is complex. That's not the reason. The reason is there is the fear of one, making mistakes. There's the fear of the Internal Revenue Service, and there's the fear of the unknown. And so most people go into business, depending on whatever stage you are in your business life cycle, already having some prejudice as to what you have been made to believe taxes is all about. I like to really debunk that for those of you who are here today. And because if you can truly master the game of tax planning, it will accelerate for you how you can get to your goals of financial freedom as quickly as possible. And the way we've done that, like Ricardo said when he was introducing me, is we have come up with our foolproof strategy. I call it our simple 6-step tax saving system, and we have called it what we call the Decide. And I'm going to unpack what Decide is all about in our short time today. And hopefully that will put in each of you's mind what you stand to benefit when you actively take care of tax planning. Now, what exactly is Decide all about? Now, the 6 steps of a good tax strategy must incorporate every of these things that I'm going to talk about this morning. The first thing is you got to learn how to deduct like a professional. And it's easier than most people think. I have made a living in the last 20 years teaching business owners how to really use the tax code to maximize their deduction in very legal manner. The second thing is your business entity has to be the right structure to help you reduce taxes and also protect your assets. The third is what we call credits. I love credits even more than deductions because when you are maximizing credits, you are literally getting the government to be the one to pay your taxes for you. The fourth is learning how to shift income, which primarily just means moving monies from lower tax brackets, from higher tax brackets to lower one. This is one of my least favorite method, which is deferral. You are using timing to just punt the ball forward and keep as much dollars for yourself. Lastly is what I call elimination, which is the secret of the wealthy to zero taxes. For everybody's information, I am apolitical. But I remember some 8 years ago, there was the issue of a political aspirant who ended up paying only $750 on his tax return, and he is reputed to be a billionaire. I spent one weekend going through those tax returns, and I came out of my office saying to my wife, I don't know what the media is griping about here, because the reality is everything I saw on that tax return only showed that both the business owner and his accountants did very excellent planning. Now, notwithstanding where you may be in your business growth, if you truly sit down with a good tax advisor, and mark my words carefully, I'm not talking of a tax preparer. There's a difference between having a tax advisor and a tax preparer. If you work with a good tax advisor, you should be able to use these 6 steps to get you to as close as zero taxes as is possible. Now, let's try to unpack it with the short time that we have together this morning. The first thing is, what does it mean to be able to deduct like a professional? Now, I have what I call the golden rules of deduction, which is the BOND. I like using acronyms because it makes it easy for everybody to remember things. Some of you, and I'm dating myself now, may be very familiar with the James Bond series of movies. Now, if you remember the Bond, then you will remember some of the rules of what it takes to be able to make deductions. The first thing is, anything that you are going to deduct for tax purposes, it has to have a business purpose. Okay, that's the first thing. The second thing is it has to be ordinary. Now, in taxation, words mean things different from the way we use them on the streets. When we use that word ordinary in taxation, we are saying that it is typical in occurrence, is typical in nature, and in amount as it relates to that kind of business. What may be typical for a real estate agent may not be typical for me as a CPA. So there is always what is typical in occurrence, okay? The N represents, is it necessary to help you increase your revenue or your market share or grow your business? And lastly, you got to have documents, proof of expense. There is nothing that a tax agent hates more than a business owner who truly knows how to document their expenses. If you can simply learn how to follow this bond golden rule of deductions, you are like at least 20 to 40% halfway there to learning how to maximize your deductions. And the reason why I'm pushing hard on this morning is because too many times, many people come to me and they ask this question. They ask the wrong question. The wrong question is always, am I able to deduct something? The question should never be, can I deduct? The right question has to always be, how can I deduct? Because those are two different things. When you come to your CPA with a mindset of, how can I deduct this so that even if I'm audited, I pass the audit test, that puts you in a framework where you are open-minded enough to learn how to follow the BOND steps and get yourself to a place of deduction, okay? Now, I will quickly put some commonly missed deductions that I see with many small business owners, because when Abraham sent out this flyer, one of the things he promised was the fact that people are going to go away with actionable items, and I want to keep to that promise. One of the things I see most people miss very commonly is what I call the home office. I have no idea why. This is something that has been established in our tax code very well since 1986. It was further reaffirmed with the TCJA Act of 2017. I call it the gift that keeps giving. And I can't go into all of the details. Time will not allow me to do that. But you need to be able to ask yourself, do I have a home office? Am I really taking advantage of the home office? That's one of the common deductions that people miss. The second deduction that most business owners miss is the business of travel. My wife doesn't like me saying this, but I know for a fact that since we opened our first business in 2007, there is none of my trips, whether local, international, or wherever that trip is, that is not a business deductible trip. So there are rules. And so you have to learn how to make those trips become deductible, even if those trips include vacations. The question is, if you are genuinely interested in getting yourself to zero taxation, then whatever little amount of work you need to do to make those travels be legally and ethically and morally deductible as a business expense, you will make that sacrifice to do it. So travel is one other big item of deductions that most business owners miss. A third one is what I call the meals. My wife and I and every of our children are employees in our business, so it doesn't matter to us if we go to have meals, whether on Sundays or whenever. We just have mastered how to make the rules work, because there are rules to how to deduct meals. Most people miss things like this, and they are just there for you to pick on. Another commonly missed expense is what I call auto expense deduction. I guess most people, everybody use cars, but you find when you look through people's tax returns, they don't really know how to maximize the benefit of their auto deductions, okay? So these are just some very common expenses that most people miss, and I'm not going to spend too much time on that. Now, the second thing I want to talk about is the E in our decide, which is, how is your business set up and organize. But before we go on, if it's okay with Abraham, I don't know if you want to just put up your second question and if people can type in their answers for you before we continue.
Yes, I'll go ahead and drop the second poll question here. Just a heads up. Tax season feeling. When you think about tax season, what comes to mind?
So we'll give everybody like 1 minute to just, what are your options, Abraham?
So 1, I have an annual tax plan in place. If you do, Michael's very proud of you.
Yes.
2, 2, I start to feel stressed. That's me. 3, I scramble at the last minute. Very common. 4, I call my accountant right away. And then 5, I'm here to finally get ahead, which I'm assuming most of you are there as well.
Let's give everybody like 30 seconds to give us one of those 5 options. Just so we really see where people are.
We got a good mix of folks. We got
Yep.
some 2s, some 5s, some 3s, a couple 4s.
Cool.
Good
Which is
wide
not-
range.
So is there anybody there who is doing tax planning as it is currently?
I don't think so.
So that just goes to speak to why it's so important that people really get into that. Now, the second thing, like I said, we have a 6-step process. We just talked through deductions. What I want to talk about now is how is your business set up and organized, okay? And I'm talking about what kind of entity is your business structured to be. This really matters. Entities are the pillars of any good tax strategy. Setting up the correct entity is so important because it affects how much taxes you pay. It determines your legal responsibility in the event of a lawsuit or legal matter. A big mistake most people make is to set up their entity structure just as their friends set theirs up. You want to research, talk to a good tax advisor, and know what is the best option for you. I always say to business owners, if you stay long enough in business, the question will never be, will you ever have a legal challenge? It's always going to be when that legal challenge will come. So it's extremely important that please, how your business is set up is something you have a conversation with both your tax advisor and an attorney for that matter. Now, there is a difference between what a legal entity is and what a tax entity is. Now, time will not allow me or permit me to go into all of these details, but I want to say there are just 4 most common types of entities. Most of you here may actually be doing business as a sole proprietor, which is really, really not recommended. In fact, if you are coming to us as a client and your business is already grossing over $75,000 a year, we are going to be highly recommending you change that, okay? Most other people will do business as a partnership between themselves and their friends or whoever. And some people do businesses as a corporation. Now, there are different types of corporations. And lastly, people will also do business as a limited liability company. Again, this is a high-level webinar, so I can't go into all those details because each of these topics that I am going through, they are specific courses that I have taught over a long time, okay? But you really, truly want to understand your entity type matter, 1, for you to help reduce your taxes, and secondly, for you to protect your assets. The third thing I want to talk about is credits. Credits are government incentives that truly control behavior. Like I said earlier, they are better than deductions. They reduce your taxes dollar for dollar. Some of them are refundable, some of them are non-refundable. In fact, the way I look at credits, it's the government literally helping to pay my taxes. And so it's important to begin to have those conversations with your tax advisor, because most times, if you're just working with a tax preparer, all a tax preparer is doing is preparing your taxes. at the end of the year when it's already too late. It's like saying the game is over and you are trying to get in the game. I just threw out there for everybody's benefit some commonly missed credits that business owners should look into for themselves. Okay. Now, the fourth strategy for me is what I call income shifting. Income shifting pretty much just talks about learning to manage taxes to lower tax brackets, your age parents, your kids, learning to pay them as workers, giving shares to them. Okay. So these are all things that if you really learn how to take care and do the right things in the right way the big boys have written the rules of tax code, you will be able to get the benefit that the big boys get out of it. Okay. Instead of complaining that why is some people paying very low taxes and I'm just a struggling businessman, you got to learn to sit across the table from a tax advisor and learn how you can really use the code to your benefit. Now, the fifth is what I call deferral. Now, again, I put out there just high level for people to think through some of the way you can kick the ball down the road, because there's always the time value of money. Money you have today is worth a whole lot more than money you have 5 years from today. So if you really learn how to defer taxes, then you are keeping more for yourself and getting more cash flow to put into your business. So deferral is our fifth method. And lastly, is what I call learning to eliminate taxes completely. Now, eliminating taxes is a long-term goal. You have to plan how you do what you're doing. Even before you get into business, you should already be thinking and planning how you're going to exit from that business. I typically call elimination what the super rich uses to bring themselves to a zero tax planning. Okay. I don't have all the time today, but I want to leave everybody with a few quick tips here, because if you will just follow the few tips I'll put here, I'm sure that by the end of this year, you will be in a better position. It's strange that the next speaker for next month is going to be somebody that will be talking about knowing your numbers. My first tip is you got to get a good bookkeeper, because what it does is it helps to even reduce your tax return preparation bill. Most of you either have your spouses as your bookkeepers, or you're doing your bookkeeping yourself, or you have no bookkeeping at all. All you have is what I call a shoebox of receipts. That's already playing a losing game, because if you have a good bookkeeper, your bookkeeper is going to help you really avoid commingling personal and business monies, okay? It makes for efficient tax audit if one ever occurs. And it helps your tax advisor to really plan out the taxes or the strategies that will help you get yourself to a better place. Bookkeeping, I cannot emphasize it enough. It helps for compliance, and it really can help you in detecting financial fraud. Believe it, many people suffer a lot of frauds, even within their small business, with unscrupulous employees. But if you have good books, a good bookkeeper will help you know that something is not going the right way. And it frees up your time to work on activities to grow your business, instead of you trying to be all things to all men in your business. So that's my first tip. The other thing is you want to hire a tax advisor and not a tax preparer. There is a serious big difference between who a tax advisor is and who a tax preparer is, okay? Now, a tax preparer is reactive. He or she is not proactive. All the tax preparer is doing is you are just waiting to the end of the year and you bringing your stuff to that person. You know what? It's already too late. That year has ended and there's nothing the person can do. All that person is going to be doing for you is taking your numbers and throwing it into a tax software and coming up with the final numbers of what you owe. A tax advisor, on the contrary, is somebody who gives you strategic advice. Now, a tax preparer, you are the one that is asking the question. If you're working with a tax advisor, he or she will be the one leading with questions to help understand the facts, okay? Your preparer's answers are always in a vacuum. Your advisor will take your goals into consideration. For me, the tax preparer's job is garbage in, garbage out. The tax advisor takes care of making sure that any deductions that you are missing, all of them are brought into play. So these are my very easy advice for most of you. And lastly, I just want to say tax planning to me is the bridge to wealth creation. Whatever any one of you's dream is in becoming a business owner, there was something that made you to say, I want to become a business owner. And if you are to get to that goal, it means you have to have good wealth strategy. Tax planning has to be in the middle. And if you are getting to that point where your legacy is achieved, tax planning is that bridge to wealth creation. I apologize. I know I went really fast because I'm trying to keep within my time limit. Abraham, I'm going to put this slide out there. I'd like to give back to the committee. I promised Ricardo that. So for those of you who may want access to a mini video course, which kind of gives more details to some of what I've talked about, you can just email Zero Tax System to this email address that I have on here. And we also have an ebook that we are happy to share with you. That ebook is an easy read. It's not going to make you a tax advisor, but it's going to just help you even be smarter in discussing and having conversations with your tax advisor. With that, I think my time is up, and I will leave it open for questions.
Thanks, Michael.
Yes.
Covered a lot of good stuff there. We do have some questions in the chat, which I'll kind of go through. There's
Sure.
some in the Q&A, so we got quite a bit of time here to answer any questions. And then the third one also, if anyone just wants to raise their hand, once we go through a couple of these, you can do that, and then I can promote you so you can speak and interact with us. So I guess I'll just start from the top here. When should a business consider hiring a CPA versus a typical accountant or bookkeeper?
Great question. Very great question. The best time to hire a CPA is even before that business opens shop. And I believe me, I am not promoting the professions or promoting my business. The reality is any good tax advisor is not just a bean counter. A good tax advisor is a successful business strategist. In fact, I always say to clients, if you're going to work with a CPA and you don't see success around him, you should question whether or not that is the right business advisor. A good CPA is a good advisor. So there's a whole lot of planning that goes into making your business successful. So at the point of conception, before you begin to open the doors to your business, that's when you should have a good tax advisor.
Thanks. I think this one's similar to that. How do you stay on top of the several tax laws which continue to change?
Another good question. It is not your job as a business owner to stay on top of the tax laws. That is why I emphasize the need to ensure you have a tax advisor and not a tax preparer. Tax laws continue to change literally almost every minute and every day. We had a major change in 2017. We are definitely going to have another major tax law change between now and before the end of July. Now, the tax laws that are going to change by July, which is next month, there are lots of goodies in it. I will be in a tax conference in Utah in July for 3 days, where myself and about 86 other tax experts are huddled up to go through that bill. As a business owner, you want to do what you are good at doing, which is running your business. Trying to become an expert tax advisor for yourself is like trying to do medical surgery when you have a medical challenge. Not advisable.
Yeah, definitely want to do surgery on yourself. Good. Okay, so Jose Castillo here. What is the cost of a tax advisor? My CPA charges me $1,000 to prepare my taxes. I have a C Corp.
Excellent question. I had a client come into our office yesterday, and this is a client that has worked with us for many years, and the last 3-4 years he kind of fell off the grid and we didn't see him. The reason why I'm giving this answer in a long way is when you try to make a decision on who your tax advisor is on the basis of fees, you are already making the wrong decision. I can tell you sitting here, we do not take in clients if we cannot guarantee that if the clients implement our recommendation, we are able to help them reduce their taxes by at least 3 times the fees that we charge them. I am not bashful about our fees. I had lunch with Ricardo some days ago, and I said to him, Ricardo, our minimum fees is no less than 7,500. Now, we will not bring you in as a client if we cannot see a roadmap to helping you reduce your overall tax liability in a legal, ethical, and moral way by at least 3 times that fees. The moment you are able to see the fees that you pay into a good tax advisor as an investment, then you wouldn't be working from the perspective of I am paying $1,000. The client that I was talking about yesterday, when he showed up in our office yesterday, he was lamenting about the fact that he had a new tax bill of $75,000. And I said to him, gentleman, if you had paid a minimum of $7,500 and this bill was only $25, you will see that you would have been ahead. But now you have to pay all of this money to the taxman. So the reality is that you're going to pay somebody. The question you always have to answer for yourself is, how much are you going to pay? And am I going to be ahead at the end of the day? What is happening to most business owners is you are overpaying the tax agencies because you think you have no other option. And I'm saying in today's presentation, you have lots of options that the tax code gives to you. So don't look at it from I'm paying $1,000 for tax preparation. I guarantee you I am making no boast of it. I've done this in public face presentation. If I sit with you and go through your tax return, I can show to you that I can bring value of over $30,000 reduction on your taxes over and above that $1,000 you paying to somebody preparing your return.
Sounds like it's definitely worth the investment.
Yep.
All right, I think we got a good one here. I'm gonna read one Q&A out loud, and then if anyone wants to raise their hand, we can take that one next. So, question here, is there anything you can share for women-owned businesses and small businesses with a fundraise of 500,000, manufacturing, food, retail in the US? So this one's very specific, but if you have any insight there, Michael.
Could you repeat that question, please?
Is there anything you can share for women-owned small businesses with a fundraise of 500,000, specifically in manufacturing, food, retail in the US? And
Okay.
so, like, if you want to raise your hand, we can elaborate if you'd like.
I think what comes to my mind immediately I heard the profile that the taxpayer put out there is credits. Because in the manufacturing space, there are lots of credit that most tax preparers do not know. In fact, if you look through my slides, I talked about research and development. And I can tell you with the new tax bill that is going to come in the next couple of weeks, the research and development tax credit is even going to be way better than it used to be, okay? Because you are in a manufacturing business, you also can look into what I call the work opportunity tax credits. There are just lots of tax credits that is really more available to manufacturing. And that is why at the beginning of this presentation, I said it's purely educational because everybody's case will always be different, okay? You need to sit with a tax advisor. A good tax advisor will ask you questions, and that person can then take all the totality of your questions, look at your profile, be able to identify where you are going, and then be able to say, okay, this is the way for you. Now, as a manufacturing business, I don't know what kind of trade or what kind of manufacturing you are doing. Another thing that comes to my mind readily there is what is your exit strategy for your business? And the reason why I will be asking that question of you is if you are well structured, you can run that business for like 5 years. And let's say you choose to sell that business after 5 years of your ownership, you can walk away with all of the gains from the sale of that business and pay 0 federal taxes. That is what we call Section 1202. And I shared a slide about that, even though I was going through it. So that again, I'm just highlighting for you why it's so important to sit down with a tax advisor so that you are already planning what your strategy is. There are people, somebody asked the question, when should I hire a CPA? And I said, even before you open your doors, because if you make that strategic move on time, it may even determine whether or not you should be a C corporation or you should be an S corporation. If I know, for example, that your end goal is to try to sell this business after some point in time, then we want to look at, okay, what will be the long-term tax benefits you will get from this business if you structure it as a C corporation versus it being an S. So there's just a whole lot I can continue to unpack in that question, but that should just let you know you got to sit down with a tax advisor soonest.
Thank you, Michael. Let me go into the chat here. This is maybe a quick one. Does the fee include tax planning and preparation?
Oh, my job today is not to market my business, but the answer is yes. All of our fees are fixed fee. I was saying to the client that walked in yesterday, I said, look, it doesn't matter to us whether you're grossing or netting 20 million or you only grossing or netting $500,000, right? Our fees are fixed and it includes preparing your taxes. And the reason for that is when you come get good advice from us and you take your tax return to somebody who is just a tax preparer, who doesn't even know the strategies that we have recommended and helped you implement, they won't even know how to inculcate those strategies into your tax return. Remember at the beginning of this presentation, I said it has to be legal, it has to be moral, it has to be ethical. Now, if I don't know how to swim on the deep side of the pool, I shouldn't be going to the 8-feet side. What you are working with most tax preparers, they are people who are only good at swimming at the 2 feet. That is why somebody will tell you, oh, it's risky for you to have home office because they don't know how to document it.
That's very helpful. And this is a good transition to this question. Suppose you're an employee and find yourself working from home many hours. Can you charge a percentage of your home as a business expense?
The answer is no. The employee is not the business owner. Okay? If you are to use the home office, there are rules of what we call the home office is used regularly, exclusively for administrative work of that business. But all of our presentation today is geared towards the business owner. It's not geared towards employees. And that's why most times we don't work with just people who are W-2 workers because there isn't too many opportunities to plan for them.
That makes sense. And I guess this one's probably for business. So do you recommend deducting the part of your home used as a home office, even though it may cause complications if you sell the home?
I think people misunderstand the rules about depreciation recapture and the value of selling your home. So ab initio, when you sell your home and you have lived in that home for at least 2 of the last 5 years or 24 months in the last 60 months, if you are a single filer, you have up to $250,000 of that gain has been excluded from taxes. If you are filing married, filing joint, you have $500,000 of the gain on that sale excluded for taxes. My point in bringing out those numbers there is all of that overrides most people's supposed fear about deducting the home because the amount of depreciation that you are going to take on the home is so minute, it had no effect on that gain.
That's excellent. Thanks for the detail.
Yep.
I got some good questions here. This person funded their business through a ROBS,
Mm-hmm.
which means that my business is owned by my retirement account.
Right.
Is it possible to unwind that so that I own my business directly instead of my retirement account?
The answer is yes, 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 yes. And I'm assuming that your business may most be a franchise, because most people that use ROBs to fund their business, they are funded. They are people who go to one form of franchise or the other. So typically, your 401k will be owning like 95% of the business, and supposedly 5% of the business is then supposed to be made available for the employees to buy. Yes, I have in my career owned no less than 6 business owners' businesses from their 401k plan and take it back to their ownership. But there is a process of doing it, because you want to work with somebody who really is experienced in what you are saying. I'm working with somebody right now who they went into real estate investing and they use ROBs to do it. We've had to walk through that process very carefully so that we check all the boxes. Otherwise, the penalties of doing it incorrectly could be very severe financially. But the short answer is yes.
That's a good one. Can I deduct my gym membership?
It depends. Great question. It depends. So, and I will give you a very practical example. I have a client who is in the film industry in Hollywood. Okay. And in his case, his physical fitness is very, very foundational to his business. Okay. So his gym membership is a deductible expense. Remember, I gave the BOND. Is it a business expense? Is it ordinary? Meaning, is it a typical occurrence for that line of business? As a CPA, I cannot justify my gym membership, which I do have, as necessary for my business.
Thank you. We covered a lot here. Before I go into the Q&A questions, I don't know if Ricardo, you had any specific, maybe to small businesses or anything
I
like that.
actually have a add-on with that gym membership. Can you hear me?
Yes.
Yes, we just can't see you.
So gym membership can also affect your health. And if I'm not healthy, I cannot function and run my business. So I'm looking at the mental well-being of an individual who is running a business. By going to the gym, it's keeping their blood pressure down, keeping their weight down, and so forth. You can't argue that spending $100 a month for gym membership should be a deduction.
So $100 a month multiplied by 12 months is only $1,200. I'd rather show you more valuable deductions that you will sleep well at night and not worry if you have an audit than worry about a $1,200 deduction. Because when you come down to taxes, a $1,200 deduction is only going to reduce your taxes by about anywhere from $200 to $400 for your taxes, right? I'd rather you put more effort and value into things that will really translate into significant cash for you. Remember, that's why I'm saying your tax advisor has to be somebody that is an investment, right? Meaning he or she must put more money in your pocket from those savings.
And I think that's what I'm concluding from your presentation. Um, um, Tax examiner versus tax advisor.
Mm-hmm.
We need to go the tax advisor route so that they are working with us throughout the course of the year, identifying ways in which we can reduce our overall tax liability.
Yes.
Yeah.
Are you asking a question, Ricardo?
No, I think I'm concluding based on our meeting the other day and your lecture here that we want to go that route, especially
Yeah.
a small business owner.
So it's extremely, I can't overemphasize it. I mean, good tax advisors are not too many out there because it costs a lot of money to be well trained and continuously remain relevant. I'm here in Napa today and tomorrow. I'm going to be in Park City, Utah on the 15th to 18th. All of those cost money. So, and that's why I always say, see the business of engaging a tax advisor as an investment and not as an expense. Because taxation can easily, like I said, slow down your financial freedom. If my earlier slide said you're looking at least giving away 13 years of your life to the tax man if you are not doing any tax planning. Most people don't see it, but that's just the reality.
And is your tax payment to your advisor or CPA or accountant, is that fully deductible in the following year?
Absolutely. It's professional services. Absolutely. Absolutely.
I do have one more from the Q&A here, Ricardo. So the Trump administration is giving SOPS to pet owners. What about pet manufacturers? If all my manufacturing is in the US, how can I make best use of tax?
Is that question for Ricardo?
I think it's
No,
for
that's
you.
for you.
I'm
Okay,
just reading it out loud.
could you read the question again, please?
Yeah, so the Trump administration is giving SOPS or SOPs to pet owners. I'm not sure what SOPs are, but what about pet food manufacturers?
So there are lots of, again, anybody that is into manufacturing, please, you really have to dive deep into credits. You see, taxation is all about the government indirectly controlling how we behave. What do I mean by that? The United States have been very successful in providing inventory of homes. And the success came from the fact that they've given lots of benefit, tax benefits to real estate investors. Okay? Now, anytime the government want to stimulate any section of the economy, they do that using tax codes. With all of the press towards making America great again and having to bring manufacturing back to the US, there are just lots of treasures, not nuggets, lots of them in the upcoming tax code that is going to favor anybody who is doing their manufacturing here in the United States. I can't decode all of that for you right now. Again, you got to sit with somebody who knows what they're doing and walk you through that once this new tax law comes into being, hopefully before the end of July.
Yeah, there's some serious investment and benefits from doing manufacturing. That's for sure. And we even saw it through one of the Biden's bills, Build Back Better and others. Billions of dollars going into manufacturing, small or large. You don't have to be a large factory. You can be a home-based business and be in manufacturing.
Exactly. Yeah. See,
Okay.
the thing about the tax code, it's not the way we use words in the street. That's not the way we define things in taxation. Okay? And so that's where the advisor comes in. Because what the advisor is supposed to do is make himself a good roadmap to get you to that happy place you want to get to on taxes. All right. Any other questions?
Now we got 5 minutes left. If anybody has any, please raise your hand. We can make it a little bit more interactive, but I think we got some good questions here, Michael. Thanks for tackling all of them.
My pleasure. It's been my pleasure to give back to the city. The city has been our business home since 2009. So I told Ricardo, I'm happy to be of benefit to everybody.
I appreciate that.
Thank you so much, Michael, and I appreciate it and hope to see you again soon.
All right, so I got to run back into class. I came out of the class to do this, okay? Thank
All
you.
right, well, thank you and enjoy Napa.
All right, then. Have a wonderful weekend, everybody. Bye-bye.
Yeah.
Thanks, Michael.
So that concludes it, and hopefully folks found it rewarding. And we'll see you next month, where Audrey Johnson will be sharing basics, bookkeeping basics. Take care, everyone. Bye-bye.